Hi, my name is Matthias. I'm one of the co-founders of Billy, and with Billy we are reinventing the way how small businesses are managing their working capital. And Billy is actually not the first fintech company that we have founded. Our story goes back to end of 2013 when we founded our first company called ZenCap. It was an online small business lending company that we scaled across 3 countries and then later on sold to the UK-based platform Funding Circle. And during these years in small business lending, what we came across is that we had a great solution back then, but we didn't really tackle the core problem that small businesses were facing, and that is how they manage and how they finance their working capital. Think about your local craft beer brewery, or think about your local bike shop that is repairing your bike at spring, or even think about the cleaning company that is cleaning your offices at night. All of these companies, even though they are very different in terms of what they do, they share actually the same problem, and that is, on the one hand side, these companies are usually getting paid late by their customers. Usually they're getting paid after 30, 60, 90, or even 120 days, so they need to wait for their money, and that's called the order to cash problem. On the other hand, these companies usually need to pay their suppliers early since they don't have the bargaining power to extend their payment goals. And that is called the purchase to pay problem. And if you bring both of these problems together, then you are faced with a severe liquidity crunch that is actually the core reason for insolvencies of small businesses. And that's what we're trying to solve. That's why we said we need to build a company that is tackling these problems, especially since about 80% of insolvencies for small businesses are connected to late payments by their customers. However, if you want to solve this problem, you need to think about working capital management holistically. So on the one hand side, we said we need to start with a product that is targeting the late payments by the customers first. And this is a product where we've built an invoice financing solution for these small businesses. We are basically buying their open invoices and advancing them the cash immediately. And this is also called factoring, and factoring is not a new market. It's actually a 1.7 trillion euro market opportunity across Europe, where the largest countries are the UK, France, and Germany. In Germany alone is a 230 billion euro market opportunity. However, if you're looking at these numbers, the important thing to note is that these are very large financial institutes that are serving the mid-caps or the large caps of companies. You don't find any small businesses in these billions of invoices that are financed here. And the reason is quite simple. The large incumbents, the large financial companies, they just cannot serve small businesses since they have very old, very manual, paper-based processes where it's just unprofitable to go down market and to serve these tiny companies. Usually the financial incumbents, they are serving companies with at least 20 million in annual turnover or above, but that means that the whole long tail of small businesses that are below 20, below 10 million annual turnover, they don't have access to this product. They are completely unserved in this market. That's why we said, if we want to tackle this market, we need to completely re-engineer, completely design a new product that is, on the one hand side, as easy to use for SMEs, like unlocking your iPhone, like getting cash from an ATM machine. On the other hand, it needs to be fully digitalized. It needs to be fully automated from the customer sign-up to the risk scoring, to the risk management, fraud detection, KYC, AML, payments, and then collections and insurance. All of this needs to be fully automated, otherwise the operational cost would kill you in this market. So that's how we thought about the product, and that's how we completely redesigned a factoring product that is targeted at these SMEs. However, we are not just looking at the financing part here. What we tried to build here is a product that is taking over the whole debtor management. On the one hand side, yes, we are advancing cash to these SMEs, but then we're doing a lot more. We're insuring these invoices against default. We're taking over the whole payments part. We're taking over the whole dunning and collection part. So for the small business, it's a peace of mind product. Yeah, the small business, when they sell the invoice to us, they can completely forget about it because Billy is then taking care about the rest. And we are not building this company alone. This is such a gigantic market opportunity that we have a couple of very strong partners that are supporting us in building this product. On the upper what is it from you? On the upper left side, we have some of the largest banks that are referring customers to us. These are banks who love to do factoring with them, but they just don't have a factoring product. So that's why they're referring SME customers to us. On the lower left side, we have some of the strongest insurance partners that are insuring the invoices that we finance against fraud risk and against credit risk. On the lower right side, you see some of our refinancing partners. These are some of the banks who are providing financing that we then again use to advance the cash to these SMEs. And at the upper right side, that's a very interesting part. We are still a young startup, so we don't yet have the data that is completely necessary to build all the systems. That's why we partner with the largest tax advisors and auditing firms across these countries to then obtain the data that we need to train our risk models, that we need to train our fraud detection systems. But then again, we wanted to look at working capital management holistically. And what I just told you, this is one side of the equation, but we also need to take a look at the left side of the equation. So we try to develop a product that is really helping these small businesses to extend their payment goals. And the first product we've pushed out here is a pay after delivery product. It's a product that is completely embedded in the online checkout process of large B2B online shops, that is specifically targeted at corporate customers, and that is doing something which is a bit similar to what Klarna does here in Europe, or what a company called Affirm does in the US. It's a fully embedded checkout lending solution that is extending the payment goals of these corporate customers. If they are shopping at such an online shop, they can do not pay immediately with PayPal, but they can choose to pay after 30 days, 60 days, or 90 days, whatever the online shop chooses. And this is the first of its kind solution, since it's specifically targeted at B2B, at corporate customers. We can take a decision if we want to lend to these companies within less than a second. We have an acceptance rate of up to 90%, and we are granting credit limits of 25,000 euros as we go. And in addition, this is a completely white label solution. Yeah, so the online shop can embed this solution without the Billy logo anywhere, so we are not disturbing the relationship between the online merchant and its customer. And if you want to know how Billy is doing, what we usually try to do is we are benchmarking us against the strongest players in our sector. And I brought you here some data from my previous company, Funding Circle, which I really admire. It's a great company. They just did their IPO a couple of weeks ago. And on the other hand, I brought you some data of Market Invoice, which is the primary player, the top tier #1 player of invoice financing here in the UK. And as you can see, our solution at least has something very interesting to it, as it is outperforming both of these players. However, the top line is nothing without the bottom line. So let's take a look at the delinquencies and defaults. Our late rates in our portfolio at the moment stands at a low of about 1%. And our default rate is actually at a record low of 0.3%. And this you can only manage, from my perspective, with really superior risk management and fraud detection systems. So that's it from my side. Thanks a lot, Marco, for having me. If you want to know more about our company, feel free to join me afterwards.
Thank you so much.
Thanks a lot, Marco.